I'm not a big fan of roller coaster rides, but I have had my share of the fear gripping, high pitched screams and heart in my throat adventures caused by high speed loops, turns, back and forth motions, and steep drops. Well, that is what this month of May has felt like. Despite the reports of a strong economy, it feels as if I am locked in my seat while going on a wild ride of rising gas and food prices, the half-point interest rate increase imposed by the Federal Reserve, and the dramatic drop in the stock market that has hit some of my investments pretty hard. Not only are costs going up, but the strength of the US dollar has increased. That's a good thing, right? What could this mean for US companies, small and large, selling in the international market? Hi, I'm Dr. Sarita Jackson, President and CEO of the Global Research Institute of International Trade. Welcome to another episode of Trade on Tuesdays at 2. Today's episode answers these questions with a strong dollar weakens US export competitiveness. According to the US dollar index, the dollar has reached the 103 levels, 103.68 when I checked this morning on May 10th. This is the highest that it has been in 20 years. For the year to date alone, the dollar value has increased by 8%, and within the 1 year period, 15%. Here are two reasons why US exporters should pay attention. Number one, with the strong US dollar, exporters face less cost competitiveness because their goods and services are more expensive, which in turn affects their profit margins in the global market. Looking at the monthly export price index, the price increase reached only 0.3% in 2002. 2 decades later, in the month of March, the price index is showing a 4.5% increase. Now, notably, importers, on the other hand, benefit from cheaper imports. Number two, the strong US dollar affects the US efforts to narrow the US trade deficit. The US trade deficit in goods and services has seen a $20 billion increase just from February to March of this year alone. In other words, the trade deficit jumped from $89.8 billion in February to $109.8 billion in March, per data collected from the Bureau of Economic Analysis. Well, we have been here before. All I can say is hold on during this time. However, you do not have to ride this market alone. Join other exporters from different parts of the United States and who represent other parts of the world during our monthly problem-solving and networking session, in which we address the challenges that each exporter faces and we find a solution collectively. Sign up for our newsletter and to receive monthly reminders and details. See the link below. Thank you for watching another episode of Trade on Tuesdays at 2, and I hope to see you on the fourth Thursday of each month at 12:30 p.m. Pacific time.